FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Trilogy Metals is a world-class developer in Alaska's Ambler Mining District. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold-equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 5/21/19. Well, trade war tensions ease. Huawei gets a 90-day reprieve from the Commerce Department, but does it matter? And is it going to affect the market? Today it's up. Tomorrow, who knows? Maybe you should have sold in May and literally gone away. Certainly, if you'd sold the market and sold your precious metals, you would have been better off for sure. But if you haven't, then listen on. And as always, if you got a feeling about staying in May and not going away, email us, kl@kerrylutz.com. Well, Nick Santiago is with us now. And Nick, we've been talking about this for a while. You've been calling for a very choppy market, and it looks like your call has in fact materialized.
Well, so far it has, Kerry. So far it has. We talked about sell in May and go away. I thought, when I looked at my work, this would be a very volatile May period, and so far it has. Really, the market's topped out right in the first day of May, and since then we've had a 150-point decline in the S&P 500, went from 2950 down to 2800. Now the markets are in a consolidation phase, so the next leg down has not begun yet, but I think it is getting poised to do so.
Yeah, it could well be the case. It looks like very tentative markets, and that should be good for precious metals, right?
But when you start to get real fear out here, I think the precious metals will get a bid. If you take a look at gold futures, or better yet, if you even look at the GLD, and everybody can look at that, we had a nice little move up into the 13th of May. And again, that held till the 15th of May. Then it started to move back down as the market started to catch a little bit of a bid and the fear came off. So right now, gold will be, for at least the foreseeable future, the next few months, really, it will move on fear. And, at the moment, we don't have a whole lot of fear out here, which is surprising, but the fear will kick in, and that should help the precious metals.
Yeah, should help precious metals. As we talked about last time, you called oil coming down, and it has been doing exactly that. I think the last time we spoke, Nick, it was about $68 the barrel. It's down to around 63 right now, but it's definitely inching lower.
Yeah, so last time we spoke, I think it was at 66, and I said it would get no higher than 68, and that would be an excellent shorting opportunity. So it never really got to the 68 a barrel level on WTI. Right now, we're just a little under 63. I still don't see us getting above 68. So gets to 68, it's a great shorting opportunity. Right now, it's just floundering around. You have a lot of geopolitical events going on in the Middle East, a lot of tension with Iran. Saudi Arabia is having a lot of tensions with Iran. This soap opera has not really unfolded yet, but it probably will. So if we do get a spike, traders should just look for the 68 resistance level. Any tag or pierce of that probably is another selling opportunity in oil.
Yeah. So that's oil. And, when we talk about fear and we look at the market, it made new highs and then immediately almost pulled back. How much longer do you think it'll be before we make new highs? Is that going to be more at the end of the year?
Yes. You're not going to, I don't even know if we'll make a new high this year. But we definitely, I don't expect new highs at all. If we do make it, it won't be until probably December. I think if we can get this next leg lower like I expect, that will go a lot lower. I ultimately think the market has an end-of-year rally in it, so that will be positive for all of the major indexes and stocks. But in the meantime, we haven't started our second leg down. Once that happens, you'll see real fear kick in here. And as I said, we talked about it last time. I think it was sell in May and see you in September. So that's kind of the way it looks like, at least right now, how it's going to play out.
But are we in a bear market? Would you go that far?
I wouldn't say we're in a bear market, no, because we just made a new all-time high. But what we are in is what I like to characterize as a bear phase. And even when we had that sell-off in from September to December in 2018, I characterize that the same way. I said it's a bear phase, and then we'll get another buying opportunity. And I think that's the way this is going to play out as well. This time around, though, I'm seeing much less fear out here. There's really
complacency.
Talking heads on TV are not worried. Nobody's really concerned, but they will be soon.
It's the Alfred E. Neumann market. You remember Mad Magazine? What? Me worry? As like nukes are dropping all around them. And we've got like a very volatile political situation here at home as well. Trump, I'm absolutely sure, is going to prevail now at this point, but they can stir up a lot of grief and a lot of aggravation, and markets don't like that. So when I look at the market here, I go back to the Dow theory. So you have a longer term trend, which is either bullish or bearish. And obviously, our longer term trend is bullish, and it has been for over 10 years now. But our intermediate trend, and I think that's what you're referring to, although you didn't call it that, but in Dow theory terms, intermediate trend can last anywhere from a few weeks, a month, to 3 months, maybe even 6 months. That is down. And many people, many traders, mistake the intermediate trend for the start of a new primary trend, which in this case, they would be saying, oh, this is a bear market. Do I have that right?
Yes, you do.
So what do you do? How do you play this? A stock picker's market is what they usually call markets that nobody can figure out. But that doesn't really tell you anything, does it?
Not really. So what you'd want to do in a market like this is just say you have a 401k plan, and you're really not an active trader or an active investor like I am, where I'm in 1 minute, out another minute. I could be in for several days or several weeks, out several days or several weeks. If you're not a person that can be in front of the computer and trade these markets, really what you want to do is you want to buy defensive type companies. And I don't mean military defense. I mean, the Procter & Gambles of the world, the Kimberly-Clarks of the world, the J.M. Schmuckers of the world. These are the kind of stocks you want to be in for the next few months. You might even consider, even buying a stock maybe like a Verizon or something. But I really like the Procter & Gambles of the world, the Kimberly-Clarks, Clorox, things that consumer staples, things, consumer goods. You're going to want to be in things like that. You might also want to be in utilities. Utilities is something that will pay you a dividend. You take a look at the XLU, what you're going to see here is that has been holding up extremely well, been making new highs. Bond yields are ultimately going to go lower. You remember, Kerry, on your program the last time we met, I talked about bond yields going back down. Ultimately are going to go down to 2%. That is going to give a lift in bonds, and yields will plunge on the 10-year U.S. Treasury note. And you see all these things are starting to come to fruition. So, there are definitely ways to play this market. You can go long a bond fund. You can buy U.S. Treasuries right now. That's not a bad play at the moment.
Yeah, so stay to the safe, stay to the side, let the other people get caught in the carnage. Is that fair to say? Sure.
That's very fair. Or you could be a trader like me and you play the downside, right? You short markets.
Yeah.
And I've already been long volatility. Just last week we were in just a trade for just about a week's time, 73% on playing the VIX and volatility. So again, we have more of that coming. And if you're an avid trader, you can come and do that. If you're not, then, you go into what we call the safe haven type plays and you weather the storm. I mean, this storm will last, several months. So you want to be aware of that and protect yourself.
Agreed. And I will tell you that being prepared for that volatility index, the beauty is, that once it spikes, it's almost guaranteed to go down and go down substantially, and look for it to make a higher low, which will then indicate that it might be a good play, but you can't stay in the VIX index for any long period of time or you're going to get wiped out, right?
That's correct. It's an index where you want to be in and out. And as you said perfectly, when this thing spikes, you want to get out. Last time I got in it, I got out on the 7th of May. The VIX had spiked almost to 22. The next day, it actually went almost to 24, but I was already out. Now I waited, and I've just gotten back in it again just a couple of days ago. So, again, that's exactly how you play that. And you could get in and out of that vehicle. Every time it comes down to a very, very good support level, you jump back in, you wait for the big spike, and you get back out again. And it's a very, very good vehicle if you're a trader in this type of environment.
And if you want to have want to see something really interesting, just do the charts on it. Go over to Yahoo Finance and run the year chart and run the 6-month chart. You see that is a scary index, but it's so predictable in its unpredictability, right? Because that the instant it spikes, it has to go down because the time decay in all the options that index is composed of, those options are becoming worthless rapidly, and it drives the price right down. So I remember, who was it? Charles Nenner, he was calling it when it was around 9, and it had been like sub 10 or 11 for months, literally. He called it then. It spiked up to either 31 or 51. I can't find the chart right this second. And then almost immediately was back down into the low teens. And, you can't sit around. You got to be a very disciplined trader to capture that profit on the VIX, don't you?
Yeah, well, if you understand the technicals and the chart patterns, anything that ever goes parabolic, and if a person at home has a protractor and they put it up to their screen and they look at the last low pivot or the last low, and you'll see when something gets very steep, meaning 65, 75, 80-degree angles, those are unsustainable moves, right? So that's just a little charting trick I'll give your members or your listeners today, just a little
valuable
cheat sheet there, how to use it. So, you'll see that pattern, every time you get that parabolic type push, the markets will come back down very shortly afterwards.
Yeah, I mean, it was spectacular, that rise. I think it was last October, right? It was October. It was like literally.
When we went to 50, the last time we were at 50 was in February of 2018. We went as high as 50, and then we had another mega spike in December of this year. We got to 36, and that occurred, I believe, on Christmas Eve, the 24th of December in 2018.
Correct. That's correct. We got to 36.20, and the low, which was really entertaining, was 10.17. And it didn't go above 11 from around, I'm looking at the chart. It's an incredible chart. But back in May, it spiked a little bit in August. It went up to almost 15, immediately went down under 12, and it stayed there until it spiked in October 22nd.
That's correct. Yeah.
And after that, December 17th hit 30.11, but those are the closing prices. Those aren't the intradays. The intradays were far higher than that, and literally nosebleed territory. Nick,
I'll give you a great example. On the 17th of April, I had told the members at In the Money Stocks, I said, listen, we are going to buy the VIX sub 12. And on April 17th, it got to 11.03, and that's where we jumped in and bought the VIX. And then we exited on a Pierce of over 20 on the 7th of May for 73% gain, and that's pretty. Those are tremendous percentage gains in just a short period of time. Now the VIX, today is back down, to 15. So 1506 at the moment. So again, looks very, very interesting to me down here.
Hey, so
just a hint, if anybody wants to pick some up, this is not a bad area.
Yeah, it looks good. So I'm looking at Bitcoin, and if you look at a 1-year chart for it, it just shows you that this current peak might very well be unsustainable. I'm looking at it. It hit 8,200 last time back in June or July of 18, hit 82.16. And now it hit 82.04 May 15th, and it's backed off. And to me, that is a very bearish looking chart.
If you look at the Bitcoin chart right now, you'll see that it just went parabolic.
Yeah.
So, Bitcoin has had a run, and again, really from in 2019, it's had a tremendous move from below 4,000. I think it was around 3,300, all the way up to 78 or 7,900. That's a tremendous move.
Yes.
But once something goes parabolic like that, the amateur crowd jumps on board, and then the professionals will sell against it. And that's, again, very similar to the VIX chart too. But you could see that same parabolic move. If someone has a protractor at home, they could put it up to their screen and just look at that pattern, and that's an unsustainable pattern. I agree.
Yeah, totally. And I'm looking for volume indicators, because I think, to me, one of the most important things is the volume of transactions, and I'm not sure that it has increased or gone up much. The volume.
Well, you had a lot of volume in so far in May. In fact, you had peak volume in Bitcoin on the 14th of May.
Right. Correct.
I believe that was 31,000 contracts changed hands in Bitcoin futures. So, prior to that, if you just go back and look at January, February, and March, I think the highest volume we had was 6,000 contracts, or 6,700.
Correct.
So you could see when you get that peak volume, that's the euphoria kicking in, and again,
it's called hopium.
That's where you want to be a seller of it.
That's called hopium. Yeah, we had some major peaks.
Basically the amateurs, they chase highs, right? They always chase those moves, and that's been going on since the tulip bulb time back in Holland hundreds of years ago. So and nothing changes. Jesse Livermore used to say, human nature never changes, therefore the markets never change.
And it's so true. It was true when he said it 80 some odd years ago or 90 years ago. And it's even more true now, because so many more individual people in the market as a percentage. It's dominated by the pros. But, one thing we look at, Nick, always is the COT report. I don't know if you've looked at that or not.
Sure.
Commitment of
I
traders.
look at it every week.
All right. So when you look at gold, you know that the commercials always win and the speculators, or specs as we call them, always lose. Who are these idiots who keep losing, or is this just a totally rigged market?
No, it's not a totally rigged market. They're basically, the commitment of traders report every week is showing you the commitments. It can't get any better than that. But what happens very, very often is that the non-reportables is what they call them, right? The non-reportables, the commercial money is always the smart money. The commercial money is always ahead of the curve. They have insight to things that other people don't really have at their disposal. And like we were just talking about, when the little guy or the non-reportable position is calculated, that's the small mom and pop at home that says, hey, I'm influenced by so-and-so on TV, or I'm influenced by this commercial, or I heard, so-and-so, the talking head in the financial news media, say this or that.
Tell me about it.
And they jump on board late. And if you ever take a look at gold, and we'll talk about gold futures, but when gold put its top in 2011, do you know who upgraded it then?
I think it was Goldman, if I remember. Goldman or JP?
It was JP Morgan.
Yeah.
So here we had gold futures trading above 1,900, and it gets upgraded to 2,500. And every mom and pop jumped on board there. And, again, these guys know that they're going to get the small investor in, suckered in, and then, boom, they're going to pull the rug out from under them, and you're going to watch the price decline.
Correct.
And that started, a big bear market for gold futures at that time. So it's just a game that gets played, and, a lot of people don't realize in order to be in this profession or this business, you have to be able to be a true contrarian. You have to think opposite of what other people think. But more importantly, you have to recognize it when it's in front of you. And that's very difficult to do.
Mm-hmm. Yep. I couldn't agree with you more, because it's very hard to control your emotions the way that you need to get this edge, Nick, right?
Absolutely. It's one of the toughest things that anybody that ever tried to get into this business has to deal with. And, I've been in this business now 28 years. That's a long time. But the one thing I've learned is that I'm like a robot now. I don't care about the news. I don't even watch it. I just look at what the chart is telling me. And that's why I'm able to come on this radio program for, the last few years, and we could talk about things. I'm not going to be 100% perfect. Nobody is. Anybody that tells you that, you got to run the other way. But what I will tell you is, if you look at these graphs and you look at these charts and you learn these formations, what they are blueprints or fingerprints of human emotion. Mm-hmm. And when you can see these patterns repeat themselves time after time and time again, they're going to ultimately make you money if you know how to interpret them.
Yeah. Yeah. Effectively, they tell you a story, right? They tell a story.
That's exactly right. And then you'll hear on the news, like, there's going to be a trade deal, or there's going to be, you'll always hear the story afterwards. But, the markets were making new all-time highs going into May. I said, I'm looking for a May sell-off. Sell in May and go away, right? I had no idea what the news would be. Everybody was looking for a China trade deal. I thought we might get one. It would just be a sell the news event. I had no idea that we would have this whole trade skirmish that's now turning into a legitimate trade war. So again, never looking or knowing the catalyst, but if you know those charts, you'll know what they're telling you.
Yep. It's so true. It's so true. The charts don't lie. They can paint the chart, but they can't always paint it, right? And you really, that that eventually the chart will prevail.
That's correct.
So, all right. So, hey, dollar interest rates, where are we?
Well, interest rates ultimately, in my opinion, are headed lower. So, right now what we did on the 10-year U.S. Treasury note yield, we went down to around 3.56% on March 27th. We got pretty close to that on May 15th. Yields got down to 2.361%. They've been defended. They've been creeping up a little bit since then. Today they're around 2.43%. But once yields go back down, they're making a nice little bearish wedge. Once we crack through that March 27th low on bond yields, they are going to free fall down to 2%. And
really,
as I said before, and I said it a while ago, I ultimately think a rate cut is coming in September.
So we're going to see more inversion of the yield curve then, huh?
Very, very likely. Very, very likely. I have to think that is coming. And I also think that rate cut is coming by the central bank, Federal Reserve. And as far as the dollar goes, I've been a dollar bull for a long, long time, and I remain a dollar bull. Europe is an absolute disaster. England is a mess right now as well with the Brexit going on. So I really don't see anything stopping the dollar. I do think there'll be some pullbacks in the dollar, but the dollar continues to go higher. It really is the only game in town. And again, if you want to buy a barrel of oil, you need dollars to do so. So I don't see anything stopping the dollar. The more we get these, bad economic data, whether it's out of Japan, whether it's out of the European Union, money just continues to come into the U.S. dollar.
Yeah. I think there's an inevitability. There's a lot of debt repayment in dollars taking place, which is also, and then because Europe is such a basket case, Deutsche Bank and the rest of the banks are in such horrendous shape that we might very well see acceleration of flight capital coming into the U.S., right?
Well, you got to think about it. Europe has no bond market, right? Yeah. When you think about it, the central bank there is propped up. They bought every bond. There's no bid there. So if you're a wealthy European, where do you want to keep your money? In euros, or do you want to keep it in dollars?
Yes.
I'd have my money in dollars.
Mm-hmm. Yeah, I think so. And where are you going to put it? You're going to put it in Deutsche Bank over the weekend if you're a fund manager, or are you going to put it at JP Morgan? I mean, not that I'm saying that JP.
You're going to put it at JP
right.
Morgan.
Yeah, it's not that JP is in such great shape. We know it's not, but it is more secure than any bank in Europe, just about.
Well, all you got to do, Kerry, is look at a chart of Deutsche Bank, and the ticker symbol there is DB, David Boy. The stock right now is trading at $7.46, making all-time lows. So, I mean, it really just tells the story. Do you want to have any capital in any of these European banks? I think the answer is no. I mean, you have to have your head examined if you say yes to that. I mean, in 2007, Deutsche Bank was $140 stock. Today, it's $7.46 and falling. Yeah. So there really is no real reason to have any faith in not only Deutsche Bank, but in Europe. Europe's a disaster.
Yeah, completely. And there's nothing on the horizon that would make one think that things are going to change anytime soon.
I've been saying it for over 10 years. It's the science project that has gone wrong, and it just keeps, they keep trying to make it right, and there's no way out. I don't see it. I haven't seen it, and we'll see how this ultimately ends. But they have negative interest rates. It's just a losing policy all the way around.
Mm-hmm. Yep. Hey, it's for sure. Well, I guess we're going to find out more as time moves on, but you've been warned. Like Nick said, we're going to see volatility in this market, probably not entering a bear market per se, but you need to be aware of it. You need to act accordingly. Nick, inthemoneystocks.com. And what do we see when we go there?
You come on over, check out the Rant and Rave blog. I put content up each and every day. I do a morning video there for everybody to view. You don't even have to have a membership. You could get all the morning movers, things that I'm looking at. I put up trade levels there. And then you could take a 7-day free trial to our research center. You'll get my report. You'll get my partner's report. You'll get all of our trades. You could also join our options alert service, which has just been absolutely crushing it in 2019. And, you could just take a 7-day free trial to the intraday stock chat if you want to day trade with us. So lots of products there. We offer a couple 7-day free trials, and you could check it out and, check out the free content as well. So lots there for everybody to look at.
Very cool. All right. Hey, as always, a pleasure. Appreciate you coming on. Any questions or comments on this show? Any others? Email is kl@kerrylutz.com. Twitter feed @KerryLutz. Facebook page, Financial Survival Network. And, well, what else can we say? That if you're listening to this on a podcast platform or on YouTube, then please subscribe, like, and share. It really helps me a lot when you do it. Helps get the word out from people like Nick so you can actually do something rather than being a sitting duck. Nick, we will talk to you again real soon. Thanks for coming on.
Sounds great, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.